Good morning, everybody, and this is your S&P 500 day trade setups for today. So, Jerome came out and told the world that interest rates will be rising higher than what everybody's expecting, and we pretty much had a very quick sell-off. So we've broken through a fairly decent bit of structure here, which we were paying attention to yesterday, and we broke through another level, which would have been a deeper pullback for a little bit of relief from what was happening, and that's also sort of, we've plummeted through that. So the big thing here is we've got the oscillators crossed over pointing down, so that is rather bearish. We are, the moving averages have never really crossed over, so we're still flat. We've got non-farm payrolls coming out on Friday as well. We've got other bits of data, and we've got Jerome testifying again today, so you could say something else that swings it. But anyway, what's the bet? That if you go look at the options market, you will see that there was a large number of puts by one or two individuals that were placed yesterday on the S&P or the Dow for that matter, and sort of the daily options. Bet your bottom dollar that's what happened, and it would have been placed before the speech came out, because somebody always knows. So for me right now, we are back below the moving averages. We were above, we had a crossover, and you would have been looking for support. This was the area that I was looking at support, which is 40.20. We're now back below 4,000, so just get your 4,000 level in. It's going to influence, it's been influencing us for so long. Oscillators V's off quite nicely, heading to the downside on the 3 hour. Fairly decent structure brewing there, but my moving averages are not playing ball. And now we're back below the 1 hour moving averages. So this is just complete confusion. So the market looks at the data, starts trading, and then the central bankers come out and make noise to drive the market in the direction they want. And you've always got to ask yourself, is it a hidden agenda? Who's making money off it? So that's why I say, go look at the options market. Make up your own mind. So for me at the moment, I definitely don't want to be chasing this short right now. I would be looking at, I'm not really too keen on this level here at 4,000, but that's probably the most logical choice to do. I'd prefer 4,020, that would be my rejection area, but drop down to the 15 minutes. You'll see that is the structure that I'd be looking at, but suppose this is going to come into play. 4,002. If we get a rejection there, you can probably expect us first to tag this area where we are at the moment, which is 39.79. It's just below where we are right now, and then the next logical step would be 39.50. So that's kind of the outlook that I've got at the moment. But guys, you really need to keep your stops tight, because today could be another lot of hot air, and you probably see things moving in a different direction, or it could continue in the direction it's going. My advice is go find a website that gives you the options, the open interest from options on the S&P, and see where the daily options, where the strike rates are. So open interest and the strike that they're open for, if it's down here, then pretty much bet your bottom dollar that Jerome is going to say some more negative noise, which is going to drive us down. If it's up in this area, or 420 or 4,000 or something, bet your bottom dollar he's going to say something that's going to drive it up. Okay, so somebody always knows. That's just the bottom line. So for me at the moment, I'm a little bit skeptical about this. I think the DAX actually offers a bit more structure, and it's in a fairly solid uptrend, whereas this is all over the place. So if we do reject 4,000, I would be willing to take a stab at it, looking for 39.80. If we get through 39.80, then 39.50 will be what I'd be looking to hold on for. But what I expect is a move up, a sort of a test and then probably even a move straight to the top just to form a range before looking for the break the downside. So my advice is quite simple. Get in. So if you manage to get in on structure here, you're going to have a 100-point stop loss. You're going to get a 176-point gain. Get in, get out, close the charts, move on to tomorrow. So that's kind of the way that I would look at this today. Anyway, that's kind of my view right now. Not really too excited about what we're seeing. This is all noise driven, so it could reverse on a drop of a hat at the moment. Anything's possible. Or alternatively, it could fall like a stone as well, which is also possible. So polish those coins. Flipping them may actually get you some better entries. Anyway, wouldn't do that. Not the wisest thing to do. Probably wiser just to keep the money in your pocket and earn the interest on it. Still a positive trade. So I hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.